Right.
Very good, Bill.
Such an awesome song.
It does get the juices flowing.
Get
Little
the
Top
juices
Gun
flowing. I
action.
mean, I joined the Navy in 1987. Big reason because of Top Gun and the
Is that right?
soundtrack. I love the soundtrack. Yeah, I did. Yeah, that's
Yeah,
one of the reasons why. So, and I got my USS Missouri hat on. I'm actually going to be making a return to Pearl Harbor here soon, Craig.
that's exciting.
I'm very, very excited. First time back in like 30 something years. So I'm very excited for my Navy reunion, USS Robert E. Peary.
That's
So I'm very
awesome.
excited for that.
And,
So,
and thank you for your service.
oh,
We
my
appreciate you.
honor. So thank you very much. So we got a lot of good stuff to talk about today.
It's a good
First off,
Friday.
it's happy
Pink
as we're
Friday in the
Finance
market.
Friday. We're on the South Florida Mortgage Report. We are official, Craig. You have launched us into the stratosphere. You've got us onto Apple and Spotify, correct?
Yes, you can now subscribe to the podcast on Spotify, Apple, or YouTube. So
That's right. We
please
have
do
to
that.
subscribe, hit the like button, tell 5 of your friends that this is the place for mortgage news and fun. I mean, right? We're fun, right?
Hey, we try to give you a little what is it? What do you combine education and entertainment? What
Infotainment?
infotainment. There you go.
Infotainment? I don't know.
There you
Maybe
go.
it is a word. I don't know. I,
Sure.
I think I've heard that somewhere before,
Something
right?
like that. Yeah.
And of course, so it's Billy May, your hat dude and wearing mortgage guy, and Finance Friday coming to you live from beautiful downtown Coral Springs. We have our Capital Partners President Mortgage, Craig Garcia, and actually well known, now famous Craig
Yeah.
Garcia,
Quite. Yes, sure.
president of CPMS, because you were quoted in a magazine that I grew up on, U.S. News and World Report. You were quoted this past week, right, Craig? Although no mention of the podcast getting you into that piece, though.
I'll try to crowbar that in next
All
time.
right. All right.
Yeah.
So, but it was really cool. And so I saw it. I read the article. So tell us briefly, it's about HFA loans, not FHA, HFA loans. So
Yeah, it was nice. We got an opportunity to get interviewed by a reporter for U.S. News, and the topic was HFA loans. And HFA loans are housing finance agency loans. And really, they're really conventional loans that are used in conjunction with some local and state housing programs to help home ownership and help affordability. And so it's these are programs that are part of Fannie Mae and Freddie Mac, but they're specifically tailored to work with these first-time homebuyer programs. So kind of like one of the ones that we talk about pretty regularly,
the
which
hometown heroes.
Hometown Heroes. Hometown
Yeah,
Heroes. If you do the Hometown Heroes program, which became live this week, and I know you're going to talk about that in a second.
sure.
If you get a conventional first mortgage along with that Hometown Heroes down payment assistance, that's an HFA loan.
That's
And
right.
so, yeah. So anyway, so the article goes and talks about that and just kind of, yeah, and talks about the difference between an FHA loan and that. And yeah, no, it was a nice opportunity to be able to
It,
contribute.
it was great stuff. And these HFA loans, you know them very well, like I do, because we've been doing them here since I've been here. I mean, I don't know, 7, 8 years now.
Sure.
And historically speaking, these down payment assistance programs are very lethargic and hard to get access to. Basically, these organizations through this HFA, they let those funds be readily available to us. We go out and find the buyers, and it's more of a seamless transaction. It doesn't take 6 months to get.
No, it's definitely there are some of these down payment assistance programs out in the market where you've got to get the money from a city or a county, and sometimes it's a lot of money, but you're really dealing specifically with the county,
Yes.
and then you got to go get a mortgage somewhere else. And we do some of those programs as well, but these programs are neat because it basically gives the lender the full control to deliver the first mortgage and the down payment assistance all in one shot.
Right.
And so it can be a very streamlined process. And we've talked about some success stories. Your buyer who bought a
Yes.
$460,000 property with $6,000, you
Right.
know, using that program, and we were able to deliver that, close it in 30 days. So that's a great thing for home buyers that the agencies and Fannie and Freddie have kind of packaged this ability and given it to lenders so they can deliver stuff to the community, at speed. So
Absolutely.
it's great. Yeah.
Yeah, absolutely. So we talked a little about Hometown Heroes was launched this week. So I went online, checked this morning. Anybody can go online. It's the ehousing.com website. You have to click on Florida and so forth. But
Yeah.
I mean, the product came out on Mondays, the first 4 days, and there was $50 million available. There's
Yeah.
$46 million now. So I think like you and I discussed previously, and usually there's a rush the first week
Right.
to get these loans reserved. Interest
Yep.
rates look good. I mean, I'm looking here anywhere from like 6% to maybe around 7%, depending on a number of factors. Interest rates are good. It's a good product. I mean, it's different, the Hometown Heroes now than it has been for the past 2 summers, more of its original intent, which we spoke about
Yep.
a little bit last week. But
Yeah.
it's a great program. We're seeing some success. And I mean, my opinion, Craig, I don't know, you tell me if this is, it should be around for a couple of months, but still, you don't want to wait, right?
Well, you figure so far this week, $1 million a day. There's 50 million dollars. So that would 50 business days, right?
You would think, right?
You would think that there would be a little bit of pent up demand, and so you would think it would be a little bit faster, on the uptake um, the first week. But yeah, no, I mean, it seems like it's been 2 to 3 months. You know what I mean?
Yeah.
And then there's the opportunity. There's a lot of cancellations, and then you can get some scraps. And so usually it
Uh-huh.
goes for a little bit longer than that. But yeah, I would definitely not delay if you are
Yes.
interested in becoming a homeowner. This opportunity is something that you can absolutely take advantage of, and you got to act quick because
No.
yeah, it's going.
Absolutely. Matter of fact, I was talking with a few different agents this morning, and what houses are selling. And the houses 500,000 up take a little more time, $1 million up take a little more time. Anything 100, $500,000, they're going quick. And this is that's kind of a first time home buyer market under 500 grand. So, this stuff's available. If you think you want to buy a house, now's the time.
And just so you know, we've already approved two of these Hometown Heroes deals for condominiums. So it is
Really?
possible. Yeah. So we can do it. We are doing it now. And so you can do it on condominiums. The condominium has to be totally approvable. So, but
Right.
if it can be done, we're pretty good at that.
Good
So
stuff.
yeah.
Very, very good stuff. So let's segue from our down payment assistance. Let's talk about. I know the past few weeks we've had this kind of love affair, so to speak, with Trump and Powell and the dynamic duo, the odd couple, et cetera, et cetera. But
Yes.
there's a third guy in here now. There's the Bill Pulte, chairman of the housing. How did he come into this,
So
Greg?
Bill Pulte is, coming in off the top rope, dropping elbows. I mean,
He's
it is
laying the
pretty
hammer down.
it is pretty wild. I mean, I didn't really think that we'd be in a position where, the heads of the financial industry and the, mechanical industry in the country would be, similar to WWF or something.
Right.
But yeah,
Well, the
Bill
president is
Pulte.
Donald Trump. I mean, I guess we kind of know what we were getting, right?
There's definitely more entertainers in the
Right.
in the apparatus than ever before.
Right.
But yeah, Bill Pulte, who is in charge of the Federal Housing Finance Agency, which is the agency in charge of Fannie Mae and Freddie Mac, came out hard against Lisa Cook, one of the Fed governors, basically accusing her of mortgage fraud. And
Well,
really, yeah, it's
it
pretty
kind of
ugly.
looks
Now,
like he's got some data to back it up. I mean, the
well,
documentation is there.
you figure he's got access. So anybody who's gotten a loan through Fannie or Freddie, all that data is in under the purview of the FHFA, and so yeah, apparently, and so, but just it was pretty startling. I mean, I'm not a regular person on X, but I went to look and just see what he was saying, and I mean, he spent some time
Right.
going going to town against Cook, and really basically the gist of it was she did something where she closed on a mortgage in Michigan as a primary residence. You sign when you get a mortgage saying, "Hey, this is your intention for your occupancy," and 2 weeks later, um, signed that she was buying a primary residence in Atlanta, Georgia.
Right. Right.
So
Right.
that means it has to probably been two
Right.
simultaneous kind of applications going at the same time, both being claimed as a primary residence, um, and that is mortgage fraud.
It does appear
Yeah.
that way, and
And we don't know the details,
right.
but if that is indeed the facts, that's not an easy thing to explain. I don't
No.
think. And it is a great, and listen, I don't definitely wouldn't say I love the way that this guy went about doing this. You know what I
No,
mean?
I don't
Um,
disagree with you.
I mean, I think that the decorum that's out there with political figures is unfortunately seems lost.
Yeah, well,
But
we kinda know that given the circumstances.
yeah,
Yeah,
yeah, yeah.
yeah, I get it.
That's been that way for a bit. But the what was I going to say? So
Well, it's occupancy fraud. I mean, at the end of the day, if she's
yeah,
found guilty, it's occupancy fraud. And the way I take it, Craig, if like what we're talking about is, well, let's face it, President Trump and all the other things that happened in prior his election and prosecuted, et cetera, et cetera. It does appear. Listen, he's been trying to get Jerome Powell out. Now he sounds like they're kind of trying to dig up dirt. All of a sudden, they've got this dirt. But at the end of the day, whether they're trying to dig up dirt or not, if that's the case, and she did do mortgage fraud, that's an issue, and,
it's not a good look,
yeah,
and
yeah,
so, yeah, it does kind of bring to light the idea that, it's a good thing that they're looking at stuff like this
yes,
because, when someone, cheats the system, right?
mhm,
That, on some level, it increases borrowing costs for everybody.
that's
So
right,
if everybody's an honest player in the system, that's probably better for costs, right?
that's
Fraud
right,
ends up being a cost, even if
yeah.
does nobody gets harmed this time. There's other times where maybe it happens, and so so I think if that's something that they're cracking down on, hey, that's a good thing.
I I
But it
I
does
agree,
it does kind of give us the opportunity to kind of highlight the idea that it's no light matter to just say, oh yeah, I'm going to live somewhere that you're
right.
not going to live just so you can get a better rate. You know what I mean? And by no means should anybody think that it's that easy either. You know what
Oh,
I mean?
no. No, exactly. I was telling you earlier, so I get on X periodically, the website formerly known as Twitter.
Yep.
This gentleman I follow there, his name is Peter Schiff. He's an investment banker, been around for a long time. He used to appear on Fox News and so forth like that. He
Familiar with the
actually
name?
predicted the mortgage crisis in 2008, so forth. So I just see he posted something yesterday. Misrepresenting a second home or investment property as a primary residence is mortgage fraud. Thanks to government guaranteed mortgages, which he's not a fan of, this fraud is likely widespread. Sure, it's worse when a Fed governor does it, but let's be honest, millions of borrowers do the same thing. I actually responded. I said, "Hey, you're so wrong. I've been an originator for 23 years. I can assure you that's not the case." And he and I went back and forth with thousands of other people. And
Sure.
he's trying to make it look like, hey, everybody does this. Millions of people lie on their loan applications. That's not the case, Craig. And it's
Yeah.
very, very rare we have somebody, in my opinion, from what I've seen, come across and they're trying to
I
do that.
I would agree with you. I mean, it's not that it doesn't happen,
Right.
but the other implication that you make when you say, oh, everybody's doing it, um, is that lenders are also just going to take whatever you say
Right.
at face
Right.
value,
Right.
which is really not the case. You know what I mean?
Right.
Lenders are very cautious by nature. There are underwriters are looking. Hey, if somebody's saying it's a primary residence and they've been living in Miami, Florida, and suddenly they want to buy a primary residence in Massachusetts and they've got a doctor's practice in Miami. I mean, it's not going to make sense that they're buying a primary residence in
Right.
Massachusetts. You know what I mean? So it does need to make sense.
Right.
And so yeah, and there are times where things do make sense, and what might not look like it makes sense on the surface, it can work out. But yeah, I would say I would agree with you. It's not like everybody's doing it. Certainly, it's not like lenders are not, smart enough to, just take whatever somebody says and say, "Oh, that's what you say. Okay, I have to accept
Yeah.
that." They don't.
Absolutely not. But it makes for interesting, the talk when we talk about this. And, since we're
Yeah.
talking about Trump and Powell and Pulte and so forth and everything. So speaking of Powell, so their annual meeting for the Federal Reserve was this morning, and they had some interesting comments, and we have some market reaction, so forth. I think you've got some data to go over to kind of make light of this or translate this. So where are we at, Craig?
So it's funny. So yeah, so today is the Jackson Hole meeting. And this is like an annual meeting where the Fed
Right.
governors get together. And coming out of that meeting, the Fed chair will give a statement. And that's a market mover. It's almost as impactful of an event as a typical, FOMC meeting where they make a rate decision. They're not making a rate decision coming out of Jackson Hole, but it still can move markets. And I was all prepared to, have the podcast title, which we haven't figured out yet, to be something along the lines of, no J holes, please, or something like that.
Right.
But
That's a good one, actually.
Powell delivered.
Yeah.
Powell, came out and said some things that were, a kind of a change of tone. His tone has been kind of anti-lowering rates. That hey, the inflation fight is not over. And so and that's been obviously a source of big contention between him and the president. So today, he basically came out and they talked about the fact that hey, they feel like the inflation risk versus the employment risk, is more balanced. And
Right.
so the market had really liked what he had to say. And he also said that they are kind of viewing the potential inflationary impacts of
The
tariffs
tariffs, yeah, I
as
mentioned that,
being
yeah.
temporary.
Uh,
So he did not use transitory,
right.
but he did say temporary. So anyway, the bond market is up, the stock market is up, the financial markets are very happy today with Jerome Powell. Now that didn't keep uh, Donald Trump from tweeting out while he was talking,
Oh gosh, yeah,
that he
yeah,
needs
yeah.
to fire, he needs to
Right,
fire Cook or
right.
he's going to do it. So, so anyway, but today, Jerome Powell, the financial markets, they're happy with him. Not maybe
It's
not
a good
Trump.
day.
Yeah, yeah,
It's a
yeah,
good
yeah.
day in
So,
markets,
um,
and rates, I mean, the Freddie Mac survey came out, and the rates were still trending. Well, they kinda hold steady, but still trending at 6.5, kind of that ballpark, and, maybe a slightly higher depending on a number of factors, but, they we're looking good.
and I think that today means that there's less friction to the downside. You know what I mean?
Yes.
So that we have probably a greater chance of continued rates, easing. Doesn't mean that's what's going to happen, but the idea that Jerome is not out there taking every opportunity to say, inflation's not done. We gotta stick with the fight against inflation.
Yeah,
That's helpful.
yeah.
So,
Well, what
yeah,
does the data say, man? You got your chart handy there?
yeah, let me show you. So we've been kind of going to some chart work here just a little bit, and so I'll show you this. This is actually the 10-year Treasury again, and I kind of pulled it back for a couple of years, and I just like to this was Jackson Hole in 22. And so coming out of Jackson Hole, this is where they were in the middle of the rate hike cycle. They hadn't finished hiking rates, and Powell came out and basically said, "Hey, we're going to fight inflation until the job is done." You know, Interest rates kept going up. Is kind of what happened.
Yeah,
A year later, we had I kind of highlighted right here. This is July of 23. That was the last time they hiked rates in this interest rate hiking cycle. We didn't know at the time that that was the last hike, but it was. And then Jackson Hole happens a little bit later, and then rates actually keep going up. And then last year, Jackson Hole happens in August. September, we get a 50-point rate cut and everybody is kind of excited that hey, rates are coming down,
yeah.
and look what happens. You know what I mean? It's just, and I say this because it's the Fed cutting rates is not translate to mortgage rates.
No, absolutely. It was rates were
I
that was a
try to say it
disaster when he did that.
I try to say it every time because people have that impression. But
Yeah,
if you look at this, yeah, so he comes out, he's not so he's a little bit more dovish. They do a 50-point rate cut. They did another 25-point rate cut in November, another 25 basis point rate cut in December, and meanwhile, rates kind of kept going up. And finally, this year it's been more in a range and stable to kind of coming down.
uh,
So hey, hopefully this is the beginning of good news, for interest rates, and maybe we're seeing, maybe we're going to be coasting downhill a little bit as far as rates go. So that would be tremendous.
that would be that absolutely. I mean, and that chart just says it all, and like you said, this year, you look at look at this year on that chart, I mean, it's kinda holding steady. So
Yeah, yeah, steady, and now we're kind of, and just looks like when it goes up, it stops a little
right.
less than the last time it went up.
Yeah, we don't like those big swings, people go
I
out, they
don't
start
know.
looking at houses, and they get rates shoot up, they get afraid, they get scared, and they're not really sure what to do, so
Yeah.
great info, great data, good stuff, so, um is usually talk about mortgage rates, where they at. We're talking about market data. We talk maybe a specialty product. I do a hats off. I do a hats off on my past clients. I closed this past week, refinance. And it's funny. People say, "Oh, nobody's refinancing today. Rates are too high." I did his and his wife's purchase 15 years ago. Rate was probably like five and a quarter or something. Bought a great house in Boca for like 300 grand. You can't get a house in Boca for 300 grand anymore.
Anymore.
And he contacted me a couple months ago and goes, "Hey, Bill, you did my loan years ago. I get this first mortgage I want to pay off. And then I want to have a second mortgage I incurred over the years. I want to take some funds out because my house is worth $700,000." And so in his mind, we did the numbers. Yes, he's going back from 15 years to 30 on that first mortgage, but he's consolidating a second mortgage. They're empty nesters, and he took some cash out to do some rehab work on the house that he wanted to do, and his payment's better. He's taking advantage of the equity that's available. So don't think that we can't do refinances. People will refinance. There's a variety of reasons, and why not take advantage of all that equity you've gained, especially if you bought in that 2010 to 14 area.
For sure, for sure. Yeah, I mean, and some people some people have a rate that they're really trying not to get rid of, you know what I mean, on their first, which we totally understand. But every once in a while you get somebody who's got a small mortgage balance at a really fantastic rate, and then they've got some other debt that's at a
That's
lot
right.
higher rates.
That's
And,
right.
just depends on the blend of all that, whether anything would make sense to look at. But that's certainly a very viable conversation that a customer can have with us, with you to say, "Hey, is there an opportunity here that I should be looking at?" You know what I mean? And should I take
Yes.
advantage of it? And so, yeah, so that's a good job,
We
helping
we
that
have
customer. Yeah,
yeah, we have plenty of opportunities too. I mean, remember we have access to these second mortgage programs that, at these
sure.
rates, they're very competitive.
Yep, yep. So, anyway, pretty jam-packed Friday.
Jam-packed Friday for sure, Craig. Thank you as always for your time. You got any big plans this weekend?
Nothing crazy.
No,
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 no
no, no.
50-mile bike ride or anything.
I will try to get a bike ride in for
All
sure.
right.
Yes,
You
yes.
might, if you be careful
Yourself?
out there, but somebody might recognize you from your article from the U.S. News and World Report because you're famous now.
I will try not to give out too many autographs. Yeah.
All right. Make sure you hit the like button, hit the subscribe button. We're on Apple Podcasts and Spotify and YouTube. And love having you here. Everybody who's joining us. We're growing by leaps and bounds. And as always, Craig, we want to see you
At the
at the
closing
closing
table.
table. All right. Have a great weekend.
Thanks, guys.
See ya.